Dividend-paying stocks are a great place to be right now. When I look at my dividend portfolio, and I have a lot of money in dividend stocks, I'm only down like 0.5%.
This is CNN Breaking News.
And we begin this hour with breaking news. Another white-knuckle day is already unfolding up on Wall Street. Right now, the Dow is down about 900 points, a little bit more than 900 points. Fear of a global recession. Those fears are alarming investors here in the United States and indeed around the world.
When the market crashes, dividend-paying companies often have an easier time bouncing back. Their stability comes from their strong foundations. These are often blue-chip stocks, the big names with multinational brands that are well diversified within their industries. So while growth stocks might be more exciting, they are also more volatile and often rely on just a few products or services. That's why when the market crashes, a dividend stock don't crash as hard and are more likely to recover.
You can't have all of your money in AI stocks, in technology stocks.
Who wouldn't want a powerhouse dividend portfolio? One that consistently generates passive income day after day, pouring in thousands of dollars regularly. Imagine holding a collection of companies that spit out so much income every week and every month that it fully covers your living expenses. It replaces your need for a traditional paycheck. Dividends are, after all, passive income. It's money you earn without actively working for it. Sure, there's some upfront effort involved. You need to invest in the right assets, but once that's done, you're good to go. From then on, you're collecting passive income straight from dividends. Dividend stocks are basically the ultimate hack when it comes to investing. They are one of the only truly passive income sources out there. You invest your money once, and over time, that investment doesn't just increase in value, it also starts putting cash in your pocket. That steady flow of income can help cover your bills, or if you're planning to play the long game, you can reinvest those payouts. That's where the magic happens. What's known as the dividend snowball. Your dividends buy more shares, which generates even more dividends. And that compounding effect can build serious wealth fast.
So for those of you who are going, where do you invest? What do you do right now? It wouldn't hurt you to put a little money into dividend stocks.
If you are a dividend investor, you know you're getting your income, right, and are in a good strategy, a well-managed strategy that's consistent, that looks for consistent dividend income. You know that's coming in. And what's really cool is S&P 500 dividends since like the last 50, 60 years have grown at about 5.7%. So if you need that income and you want that income to outpace inflation, it's doing that. I found the same for my strategy, which isn't S&P specific. In addition, you have a tax-advantaged income stream. If you buy treasuries or corporate bonds, you've got an ordinary income tax. Dividends, you're getting a 15% or 20% tax rate on them. So you have all these wonderful things going for you. But the thing about all that is I think what we all know really well here is the single best investor is one who behaves well. And you can be in high growth, but then if you freak out at the wrong time, if you switch strategies at the wrong time, it can destroy years of good returns. And generally, what happens for dividend investors is they get really hooked on the income. And they know if they sell, even if it's a March of 2020, or a late 2022 when the market's down, or in October of 18, they know if they sell, they're cutting off all of their income. So that consistent income stream leads to very good behavior. It acts as a huge emotional source of comfort for investors.
Dividend investing isn't just about the money, it's about the mindset. With a solid dividend strategy, you're not just getting regular income that keep up with inflation, you're also building emotional resilience. That steady stream of cash gives investors confidence, especially during market dips. Plus, the tax advantage make dividends even more appealing compared to other income sources like bonds.
Dividends, dividends, dividends. And the reason that I love dividend-paying stocks is that when these markets do go against you, and they do start to go down, at least you are still getting income from those stocks. And if it's a good quality growth dividend stock, even if it goes way down and the dividend has been safe, you still get your income. And that income allows you time to let that stock recover and possibly make you money on that end as well. But what is key, what is really, really key, when you purchase a dividend-paying stock, especially if you do not currently need the income, you listen closely to me right now. You have got to reinvest those dividends into that stock. You are not to take the dividend in interest and then do what with it? Leave it in your money market account, whose interest rate is going to start to go down, in my opinion? No, you invest it back into that stock so that the dividend is also earning a dividend.
So what do you think? Is dividend investing a good strategy? Let me know in the comments below.